Every once in a while, a stock just comes out of nowhere, captures everyone's imagination, and absolutely lights up the market. It creates this firestorm of trading that leaves all of us asking the same thing: what in the world is going on here? Well, today, we're going to try and answer that. We're diving deep into the technicals of one of those companies, USARareEarth, ticker USAR, to decode one of the most explosive moves we've seen in a long time.
Okay, just to set the stage, let's look at the raw numbers. It's pretty wild. Back in July, you could pick this stock up for about $9. Now, fast forward to October, and boom, it's shot all the way up to nearly $26. I mean, this isn't some gentle climb. This is a full-on parabolic surge that has made this stock totally impossible to ignore.
And it's not just the price. Get a load of the sheer force behind that move. In October, the average daily trading volume just exploded to 414 million shares. Now, to give you some perspective, it was just a few million back in July. This isn't just a little more interest, folks. This is a full-blown speculative frenzy, a stampede.
And that, right there, brings us to the big question, the central theme of this whole explainer. When you see a stock move this fast and this furiously, you gotta ask, is this a rocket ship that's just warming up for a trip to the moon? Or is this a classic story of Icarus, a stock flying way, way too close to the sun? To figure that out, we've got to look at the data from both sides.
So first up, let's put on our bull horns. We're going to break down the bullish case. We'll look at all the technical signals that are screaming strength and suggest this powerful uptrend has some serious legs.
So this crazy explosion didn't just appear out of thin air. If you look back, you can see a really clear progression. There was a nice, steady climb through July and August. Then September was all about consolidation. The stock basically moved sideways, gathering its energy. And then, bam, October happened. A massive surge that just blew the doors off all the previous highs. This is the foundation of the bullish argument. Okay, to really get a handle on just how fast the stock is moving, we need to talk about moving averages. Now, don't let the term scare you. The easiest way to think about them is as the stock's long-term cruising speed, right? It just smooths out all the daily noise and shows you the real underlying trend. And just look at how this plays out with USAR. The current price, nearly $26, isn't just a little bit ahead of its averages, it's leaving them in the dust. It is dramatically above its 50-day and 200-day cruising speeds. In the world of technical analysis, this is the textbook picture of an incredibly powerful, confirmed uptrend.
So here's the key takeaway from the bull's perspective. It's not just one signal pointing up. You've got multiple other technical indicators, things that measure trend strength and buying pressure, and they're all telling the exact same story. From this angle, everything is a go. But, and this is a huge but, that's only half the story.
Now it's time to flip the coin. For every argument that USAR is a rocket ship, there's another piece of data that's flashing bright red, basically screaming a warning that this move has gone way too far, way too fast. The big concept here is the word overbought. Now, this doesn't mean the company is bad or anything like that. It's a technical term. It just means the stock's price has accelerated so quickly that a pullback is statistically very likely. Think of it like the tachometer in your car. You can redline it for a little while, sure, but you know you can't keep that needle buried in the red zone forever without something having to give. And oh boy, USAR's dashboard is a sea of red. The Relative Strength Index, the RSI, is at 7950, and anything over 70 is considered overbought. The Commodity Channel Index, the CCI, is at a staggering 315, and the Money Flow Index is way up at 87. It's not just one warning light blinking, it's a whole chorus of them screaming that this engine is running extremely, extremely hot.
Hey, remember that massive volume we were just talking about, the 414 million shares? Well, here's the twist. While the bulls look at that and see intense interest and conviction, the bears look at the exact same data and see potential exhaustion. Like a final frantic buying spree right before the momentum sputters out and the sellers take over. Two completely opposite interpretations of the very same fact.
And if you want a number that just perfectly captures the bearish case, here it is. A statistical analysis, a linear regression, shows that the current stock price is trading over 43% above where its own trend line says it should be. It's become completely detached from its own trajectory. It's like a rubber band that's been stretched way too far.
And one last piece of evidence for the bears. The stock is trading right up against the upper edge of its Bollinger Bands. The easiest way to think about these bands is like the banks of a river. A stock's price will usually flow comfortably between them, but right now USAR is pushing way up against that upper riverbank, and that's a place a stock just can't stay for very long.
Okay, so we have these two powerful, completely contradictory stories. On one hand, you've got incredible strength. On the other, extreme overextension. So what on earth happens next? Well, analysts have pretty much boiled it down to three possible futures based on all this conflicting evidence.
So here are the three paths it could take. Path 1 is the bullish scenario. The stock punches right through its recent high of $28.25, and the speculative fever just keeps on going. Path 2, the bearish scenario, it fails to hold a really key support level around $21.54, the profit takers rush in, and that triggers a sharp drop. Or, path 3, the neutral case. It just gets stuck, chopping back and forth between these two levels as the bulls and bears duke it out for control. So you shouldn't think of these as just random numbers on a screen. Think of them as battle lines. The price action around that $28.25 on the high side and $21.54 on the low side is probably going to tell us which one of those three scenarios is about to play out. These are absolutely the levels to watch.
So, after weighing all this evidence, the insane momentum versus the severe overbought signals, what is the final takeaway? What's the bottom line from the professional analysis?
Well, the verdict is pretty unambiguous. The analysis concludes with a very direct warning, and I'm quoting here. Traders should exercise extreme caution due to the speculative nature of the current move. So, in short, while the potential for more reward is there, the risk of a really sharp reversal is just as significant. This is a high-stakes game right now.
And that really leaves us with one final thought, doesn't it? In a situation just like this, you have the undeniable hype and excitement of a stock that's on fire, and it's clashing directly with cold, hard data that's suggesting it's gone too far. So the real question becomes, when the hype meets the data, which story do you choose to listen to?